Hey everyone, welcome to the Money Level Show where we think, act, and prosper. My name is Daryl Thomas. I am your host today, and today we're going to get into a few different things. But first, let's kick the intro and looking forward to catching up with you all. All righty.
Think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, here on this channel, we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies. We're only able to do that if we think, act, and prosper, if we implement the discipline, if we implement the tools that we learn, the knowledge that we receive from many guests that I bring on the show, and even the things that I research and bring to the table as well. So, um, we got to do it. This doesn't just happen overnight, and it doesn't just fall into your lap. Oftentimes it doesn't do that. So I'm looking forward to just engaging today on storing our wealth and making sure that we're protecting our purchasing power. It's very, very important, especially in this inflationary time. I recently just released a interview with Rick Rule. What's up, Neophyte? Good to see you, buddy. Just recently released an interview with Rick Rule. We talked about surviving inflation and other stock names and things like that we're looking forward to investing in. So it's good to see you, though, Neophyte. Good to see you. So it's been a few things going on. The first thing I want to jump into today, this isn't going to be a long live tonight. I am kind of tired, but I do want to engage with you all. Love just the feedback in the community here. So we're going to jump into this first article. First article is about recession. Many people have been forecasting recession. There's been some information that we're not going to have a recession. And the key thing to know is, like, even when the Fed, says like, oh, we're going to have a soft landing or whatever. This happened in 2007 when Ben Bernanke said that we would not have a recession. And then by 2008, he testified before Congress almost a year later and warning, he was pretty much panicking, like we are going to have a recession. And ultimately we have the global financial crisis. So it's important to pay attention to the warning signs. Obviously, the Federal Reserve's policies, which is called monetary policy, comes with a lag. And people think that, oh, well, they raised rates and nothing happened. Yeah, a lot of things happened. We had a we had a few banks fail, go under, right? We've had many people complaining about the interest rates on debt. We've had over $1 trillion in credit card debt. The markets, they have ran up this year, but they still have not reached their recent highs, and the cost to borrow capital has increased significantly. Mortgage rates are almost at 8%. And so there's a lot of things that have happened, so I think that this high interest rate environment is very taxing on individuals. What's going on, Pops? Good to see you. Good to see you. Glad you're joining me today. Glad you're joining me. My guy JT. What's up, man? What's up? What's up? What's up? So yeah, I just want to share that, but we're gonna go ahead and get into this article. So the Deutsche Bank studied 34 past U.S. recessions to identify key warning signs and found that all four are flashing red right now. So let's dive into this. I don't know. Oh, they're gonna make me subscribe. They're gonna make me subscribe. It's weird, I guess, because I have Apple News on my phone. It worked on my phone, so then it's not working here. But anyways, Deutsche Bank pretty much has multiple indicators that pretty much indicate recession. It's the rapid rise in interest rates, the price of oil, inflation, and then there's another one I forgot, but all of those signs are flashing red that we are going to enter a recession, and they have actually come out and say that um, that we were going to have a recession early on, and they're still sticking to their guns that that is going to happen. So they're not budging on that. And so, what can we do in a recessionary period? So a recession period, everything goes down. Every asset goes down at some point. Um, Even gold goes down. But what you notice with gold is that it bounces back really quick. You have an initial shock, um, when there's a recession, and because people have to get liquidity, people have to, like, people were selling their shares, people were liquidating their stock portfolios, people were selling their gold, they're selling everything just to get liquidity. And so you'll see a big drop in gold, silver, precious metals, and then you'll see it just spike right back up because people buy in at those cheap prices. um so Neophyte said, what percentage do you think the S&P would drop if there's a formal crash, peaked at 45.88 and it's down to 42.58 in 3 months? And then he said we can dollar cost average. Well, let's go ahead and go over to the charts. Let's do it. So I'm gonna go ahead and pull up the chart, the S&P, really quick. All right, let's just look at the SPY. Let's look at the charts and see what the charts are saying. I am not a chart expert at all, but I have done multiple classes on charts. It seems like the information just does not stick sometimes, but I think we'll be good. All right, so let's see. So we see the S&P is at what, closed at 424.50. I mean the high. I mean, this is the SPY ETF. So the high was 479.53, and then if we zoom out, this was the high the high was 479.53. This was in 2022. So the Fed announced interest rate hikes in 21. SP dropped, popped back, and then pretty much by January 2022, peaked out, and then it started trending downwards, and then we had a rally back up to about 459. Now we're at 424. And so, I mean, if we're looking at some near-term price targets, I mean, I think the S&P could probably retest these levels here. If we have a initial shock, a liquidity shock, I think we could probably test the 346 level. I mean, obviously there's some levels here where 373 or whatnot. I don't even know how to draw the lines on here and stuff, so I'm not even gonna try that. But I think that we could easily come back and test these lows here on from October 2022, when the market took a big drop. So I think that the S&P still got some ways to go. I don't know if it'll go back down to the COVID lows. I mean, it'd have to be a really dire situation. It would be a great buying opportunity then, but I don't think it'll get that low. And so, yeah, it's still a ways away from the bottom. So I try not to, obviously try not to time tops and bottoms. So it's best just to average in, so that you're not caught, throwing a bunch of money in, and then when you throw a bunch of money in and the price keeps going down and you're like, dang, I drained all my liquidity. So I just dollar cost average. I think that's the best way for me in assets that I know are, when they're very cheap and when they are either unloved or when they are just like, it's just too good to be true situation. Now you have to be careful with that. I mean, obviously, I did that with the Russian stocks, and the Russian stocks I still can't liquidate. Even though that was a major opportunity. I did meet someone at the Rural Symposium that lost 80 grand investing in Luke Oil. When Luke Oil like just took a significant drop when the invasion occurred, first happened. So, but I don't think that's going to happen with the S&P. But you know, everything isn't the best scenario. You know, even just because something falls, it doesn't mean that it's a steal or that it doesn't have any risk. So, I just want to share that. All right, so we're going to jump over to this recent article. This is about Costco selling out of gold bars. Um, it's pretty interesting. Yeah, I didn't even know they sold gold bars, and then you know, yeah, we try to learn. We learning that now. But it says someone said one critic says one of the worst things you could ever own. I'm going to see what they got to say. Um, So pretty much it said Costco did not specify how many gold bars have been sold recently or how often it restocks them. The chain based in Issaquah, Washington, that's about an hour and a half from where I live, did not immediately respond to the Associated Press. Chances are interest around Costco gold bars isn't going away anytime soon. Although 1 or 2 ounces of gold won't have a huge impact on diversifying one's investment portfolio, experts note that there's been increasing investor demand for precious metals in recent years, and that's likely to continue. What's behind the demand for gold? Interest in buying gold stems from feelings of uncertainty. There's a lot of things to feel uncertain about: inflation, interest rates, government debt, deficits, war in Ukraine, supply shortages, lack of investment in resources, civil unrest. You know, you name it. There's so many risks right now. You know, uncertainties, and so recent bank failures. I didn't even mention that bank failures, inflation, and individuals' concerns about the U.S. dollar, the devaluation of the U.S. dollar. The government continues to print money. The Fed continues to tighten. The value of the dollar is not getting us as far as we used to. So those are reasons why people buy precious metals. So it can cause people to start looking for alternative places to park their money. If someone going out, if someone's going out to buy gold, that means that they think that there's some type of instability at a structural level of the market or the government itself. That's true. So you're insuring your money. So we have life insurance, we got health insurance, we're insuring our person, right? But insuring your money is by owning gold. You got to insure your money. Is gold worth the investment? Um, there's this one guy on here. He was the critic. I'm trying to find him. Let's see. So one guy says he's looking for a safe haven, so he's pro. This guy's anti. Wagner says gold is one of the worst things you can ever own. Among the downsides, he argues that gold isn't the inflationary hedge many say it is, with inflation at times outpacing gold in recent decades. All right, so I don't know how young this guy is or whatnot, but I mean, he's obviously not referring to decade of 70s and 80s when gold outperformed, or the decade of the 2000s. In that there are more efficient ways to protect your wealth against the loss of capital, such as through derivative-based investments. So this is pretty interesting. So I want to get into this part. We're going to come back to this. The Commodities Futures Trade Commission also warned people be wary of investing in gold. Okay, so like they got our back, right? Precious metals can be highly volatile. And the commission said, and the prices rise as demand goes up, meaning when the economy anxiety or instability is high, the people who typically profit from precious metals are the sellers. So they mentioned like gold is very volatile. Gold is not that volatile. They're acting like it's Bitcoin or some type of meme coin or some type of where you're going to lose half your value or more than half your value in the course of months. Gold is not that volatile. So I totally push back against what the trade commission is saying. And so I'm just jumping back over to the comments real quick. Neophyte said, honestly think the funny money is going to make the market pop the rest of this year and next, stimulated by the government, of course. We got a presidential election. Voters got to be in a good mood financially to vote. Should have bought Costco stock, then gold. um, so I think that whatever the case is, like even with the election, like the same thing still applies. Like I was listening to an interview from Robert Freeland earlier, and the way he talks about just like how much energy is needed for this energy transition, like it's almost like hopeless. It's almost hopeless, just how far we're behind in investing in our infrastructure and such. And so um it'd be interesting to see when that happens, but I do think that um they need to put more money forth. And so um should have bought Costco stock, then gold. Costco, I would have bought pre-pandemic. Ever since the pandemic, that stock has ran crazy. Um, I don't think I would touch it now. Let's see where Costco's at real quick. Let's see. Yep. Let's see. Costco had its all-time high April of 22 at $617. It's currently sitting at 569. I would not be touching Costco right now. I mean, maybe, May of 22 it dropped down to 407. That could have been a nice pickup, right? But yeah, it's already done. I'm not touching it. I am not touching that. No siree. So I want to jump over here into derivatives. So this is on Investopedia. So the one guy, he says, like, it's better for you to invest in derivatives, right? And there's trade-offs to everything, right? There's pros and cons with gold. There's pros and cons with everything, right? But a derivative is pretty much a financial contract, and that's based on the underlying asset. So the value is based on the underlying asset. So this could be like options, future trading, OTC stocks, things of that nature. So the issue with his point is that gold is the only asset that's not someone else's liability. So a derivative is someone else's liability. So you're depending on the stock. You're depending on the person who owns the shares for the option. You're depending on, what I'm saying? So you're depending on the liability. Like it's the liability of someone else's versus gold. Like when you have it, it's not a liability of anybody. If you own gold shares, it's a liability of someone. Someone has to pay you that money, right? They have to cash that out, pay you that money. So he's really missing the point of the purpose of gold when he says like, oh, there's better investments or derivative. Well, gold is not an investment. It's insurance. It's insurance. It's an investment if you're buying gold stocks, if you're buying gold futures, things like that. But when you're holding physical metals, it is a insurance policy on your money. So I'm just going to jump over to here. I mean, gold is money. I mean, we're looking at the Constitution right now. Uh, Section 10, Clause 1. No state shall enter any treaty, alliance, or confederation, grant letters of marque or reprisal, coin money, emit bills of credit, make anything but gold and silver coin a tender of payment debts. So they can they shouldn't make anything but gold or silver coins tender. So this is money, right? This has been money for thousands of years. Why? Because it's protected the purchasing power. I mean, if you look at the price of gold versus the value of the dollar, like you see that the dollar has decreased significantly and gold has increased significantly. So yeah, I mean the guy who's saying that it's a terrible idea, I feel like it's stupid. I think that's stupidity for him to say that. What do y'all think? Do y'all think the gentleman from um, the Costco article that said that, oh, that's a terrible idea to hold gold? Do y'all think that um, is that stupidity? Right. Um, yeah, because I think it is. I mean, obviously, you've had many situations where gold has built many people out. Gold has built people out of the um, Great Depression, built people out of Nazi Germany, um, all those things, right? So it's money. So I just wanted to share that. Go through a couple articles tonight. I hope you all doing well. Um, if you haven't yet, seen or done any business with Miles Franklin, be sure to email info@milesfranklin.com and let them know I sent you, or call this number. And if you're ready to purchase some precious metals, they will assist you, and I will receive a commission as well. So definitely would love to have your support with that if you have not yet done that. I do think that there's another thing I want to share. Um, it's good, JT. Glad you're doing well, buddy. Glad you're doing well. I do have a really good interview with Chad Peters of Ridgeline Minerals. So I've talked to Chad, and he's mentioned how now is the best time to invest in a lot of the junior resource companies. Shares are very, very cheap right now, and so I'm going to release an interview with him probably coming up in the next couple of days. We went through a whole interactive model on this website of where his projects are, and how they map out the land, and how they drill the holes to find deposits, and then how many holes they got to drill, how many grams of gold per ton of rock, how many grams of silver per ton of rock, what makes a good grade. So for example, if you're getting like about 450 grams of gold per ton, then that's a really awesome grade versus a 150 grams per ton. And so we went through just got into the weeds of the exploration and drilling. Um, and then also at what point do you get into um, the selling of the project to the mines such as Barrick or Newmont Mining. And so yeah, it's very, very informative, and I think it'll be good, if you all check that out. It's coming out in a couple of days. Um, he does business with Newmont Mining and Barrick Gold. He has a project with them. And yeah, it's an amazing interview that's going to be coming out. Yeah, have you looked into doing a precious metals IRA with Miles Franklin? I have not looked into that yet. After I sold a lot of my stack, I wanted to restack and kind of just get my personal holdings to a good place. Ooh, sorry about that. Get my personal holdings of gold back to a good place after I liquidated a lot of the numismatics and stuff. And so eventually I'm gonna be looking at something like that. I have used the One Gold app. I don't think I'm gonna be using that anymore, because you have to transfer it into AppMex Metals, which AppMex charges really high premiums on their products. Um, so yeah, so if you go to Miles Franklin, though, be sure to talk to the dealer so you can get a really good deal. They have some really good deals every week, so be sure to check in with them. But I have not looked at a precious metals IRA. I'll get to that point at some point. Right now, I'm just focused on my own personal stack and kind of diversifying within, you know, my house and another house as well. So I'm just kind of getting that together, and then I'm gonna play around with the Sprott ETFs because you can really just own. I mean, you can own a precious metals IRA, or you can own freaking Sprott products, physical gold trust and silver trust in your IRA account as well. So that's another way to do it. I'm also waiting on Battle Bank. So once Battle Bank gets going, then I'm gonna be really looking at their products as well. Um, so yeah, but I just haven't checked it out yet. Um, I was gonna go look at. I was gonna look at real quick. Yeah, I was gonna show you Ridgeline metals, minerals. All right, here we go. So yeah, bro, definitely way too high premiums, man. I was looking at one of the American Gold Eagles, 1/10 ounces. They were charging like 270 something bucks, 275 bucks. I'm like, you can get it. I just bought two of them for 215. And I just bought and there's another site that I found them at 215 for 215. So I'm like, why would I pay 60 bucks more for the same coin? But I mean, they're getting over people with that. I mean, people paying them, and it's sad though. All right, so this Ridgeline Minerals, you see, they've, back in 2011, they were pretty high, came all the way down, and we had the spike up to 75 cents after post pandemic, and now we're sitting at about 15 cents. So we're at a really really low price point right now. Um, so this is a company that they are on the OTC market as well, but I'll probably end up buying on the TSX. Um, just after talking with Chad, I think I'm gonna become a shareholder in them. This isn't financial advice, but um, right now they're just very low. So I think that I want to invest in them. They have some good products. They got some good things going for themselves, and they got some really high capital invested in their company. Which, I mean, if you follow the money, like you'll see that there's some big players invested in them, and the CEO is super cool, very accessible. I mean, he even shares on the interview his phone number, where you can find his phone number, how you can contact him, all those things. And he started this out of his garage. So, I just love stories like that, and looking forward to releasing that interview with him. So that's one thing that I'm gonna be investing in soon. Well, all right, y'all. I gotta get going. I'm about getting sleepy. I'm yawning and everything. Just wanted to tap in with y'all really quick. So y'all have a blessed night and everything. Take care, and we will talk soon. All right.